So what I was saying is, like, you have a starting point, okay? And then it comes out, and then you have a line, and then a
Mhm.
line, and then you have this, and then this, and then it does this and goes like that, and so on and so forth. And it does this on both sides, right? So my thinking of like the mental side of things and risk management is like, if you have this or your character is this, then you go this way, right? But if this is true or that is true, you go this or that way. And just creating that kind of system and path, right, for people to follow that, like what I think is appropriate, that lines up with all the variables that I mentioned before. Does that make sense what I'm saying?
Mhm.
Whereas like most people kind of teach that thing, like the mental game and risk management, and they just teach it like, all right, this is the starting point, and then this is the end point. And I just don't think that that's appropriate, because if you've got one guy and he's got, $1 million, you know, over here, and then you got a little M there, and then you got another guy over here and he's got 100. Like, are those guys going to follow like the same kind of method? And you know what I mean? Like, it doesn't make sense, psychologically, risk management, strategy, none of it. It's not going to be the same. So that was kind of my thinking, and how I want to approach that kind of lesson, or video set, or whatever you want to call it. You remember how before we were talking about, we had the fib tool set up, and let me just kind of hide. Well, I don't need to hide those. So we had the fib tool set up with our, custom settings, to where it was, the, starting point, the 25, the 50, and the 75% mark. And I was saying that those are the most important areas in a range. Okay. And I said the way I think and define a range is, a range definition, simply put, is a starting point and an end point. Um, and, that's essentially a low and a high. Okay. So let's kind of go in here to where we're at now. Right. And if I come in here and I grab my tool with those custom settings, and this, and the relevant highs and lows, like we've been talking about, are super important for this, like very important, because that tells us the range that we're stuck in. So if I measure from the relevant high, that should hold because we're in a downtrend on the daily, and I pull it down to the relevant low, which we should lose, that should be weak, because of that same thing. We're in a downtrend. Now, a lot of people would look at this on a side note, and be like, oh, well, we're in an uptrend on the daily. I mean, yeah, in a way we are, but these aren't the moves that matter on this time frame, right? Like, this is what we need to gain to really go in a true uptrend. And this is what we need to lose to continue that downtrend. And we should lose it, because that's just following the trend that we're already in on that time frame. So if we have this high and then we come down, and we see that it comes up, and now we know this is kind of a low, right? We can measure from here to here, and then we can see these 3 points in the middle, that like those are the ones that are important. And for like probably close to 2 months, I've been saying like this area in here was where I thought that it was, it should come up to. And we came real close. Now, that doesn't mean because we came real close that that's it and we're dumping now. It just means that it's starting to get a lot more likely that we're going to have that pullback and start to lose these lows in here. Now, if you kind of look, like it comes really close to that, right? So now let's erase this one and let's kind of go, in this move right here. So we have this low and then we have this high. So let's do the exact same thing. And we're going to pull to that high. I'm just pulling it over so we can see all the lines. So it's from here to here. Now, as this goes up, now we're looking for where is it more than likely going to bounce. This is the place, the EQ, the 50% point that you want to start looking for trades in a long direction. You know what I mean? And you can see it kind of bounces just above it. And then ultimately, the strength of the move is going to dictate which one of these three that it hits and ultimately moves off of. The strength in this case is very strong. It's very strong downtrend. So it comes down all the way to the 75% mark. I mean, almost like perfectly, which actually created a trend. So then if we do the exact same thing we just did, but now we're in a new leg, right? We know this is a low. So let's do this low to this high, okay? So we're going to pull that to that high right here, all right? So as this comes up, we want to look for the same thing. We want to look, and if I'm looking for a long, I'm not going to look here to here. It's risky, but I'll start to look from this point below. Obviously, the starting point is the safest. This one's a little safer, and so on and so forth, right? Now, it doesn't mean, like I said before, that, oh, this is the EQ, I'm going to trade this and, pop it in and whatnot and just run with it. That's not really kind of how I see it. So we can keep following that, and you can keep going down in time frames to dial that in, so we'll go to this one to that one, and we go there, and then look, so we have this move and it comes up. So now we're kind of looking in here of like where we're going to have pullbacks, and you can see it kind of respond to these levels right there and right there. And when one is not respected exactly, you can almost guarantee that it's going to at least bounce off of it, and then it's going to go to the next one. And you just go down on time frames to kind of dial this accuracy in. All right, let's do it again. And we're going to go from, we made this low, and then we made this high. I'm going to pull it over here. And then we come up, and then we go just past that. Now, one thing to remember is that in between these points, the halfway point is another 25 or 50 or 75% point on a lower time frame. And I know that's kind of like, well, dang, you could like find one anywhere, right? But it's really the relevant break of structure levels that are important. Those are the ones that you really want to be measuring from. It's not to say that you can't measure in between these to get good information, because these are probably breaks of structure on lower time frames, but we're not measuring them on those time frames right now. We're measuring them on this. So right now, the ones that matter on this time frame are here and here. All right. Now, if we go to the 4 hour, so let me go to the 4 hour. So if I squeeze it up, you see the same thing, right? But if I spread it out a little bit, you get some more information. So now let's just say the move we're in now. So we created this low, which is a strong low on this time frame, and I'm going to measure up to the high that that low created. I'm just going to bring it over here. So this is my 4-hour range, right? This is the low I need to lose to change trend on the 4-hour, but it should hold because we're in an uptrend on the 4-hour. And this is the high that we need to gain to continue that uptrend on the 4-hour. And it's weak, so we should gain it. Only speaking about this time frame. Now, look at where we're like bouncing right now. Like right on that 50% point, right on the EQ, you know, and then as it comes up, it bounces on this. Now, can any of you like kind of see or hypothesize as to why it bounced off of the 25% point, even though I marked it from this low to that high, and now it's going in a different direction? And like, you know, it's not like an important question. I'm just curious. I think questions like that help people kind of think about it.
Um,
Think about, I'll give you,
there was like stuff that had happened around those levels before, like key levels, or no?
yeah, no, that's definitely true. But like what I'm looking for is, I'm gonna give you a hint, or you guys a hint. What have we been doing the last like 5 or 10 minutes? We've been progressing from highs and lows, right? Now, think about it that way.
Is it because we've already hit the high?
Well, the high was created. The high was what we've measured off of before, right? So if before we were measuring from here to here and from here to here to figure out what that next leg is doing, right? So if I'm measuring from here to here, I'm trying to figure out what this leg's doing. And if I'm measuring from, you know, here to here, I'm trying to figure out what this one is doing. And the direction of trend is going to really impact that, like my decision making. Okay. So our last one was here to here, and then the current one is from here to here. Now, obviously, I may not have the end of this move, but what I have right now is this. And I'm going to just kind of keep in mind what we have right here, so we know we're bouncing off of the EQ. Now, this is the information I've got. So what I'm going to do is I'm going to be like, all right, this is the high. And then I know that we're bouncing on the EQ of this leg right here. Okay.
Mm-hmm.
So I know this is the spot that I need to, you know, if I want to start looking for longs, the EQ is that's the first place that I want to start looking. Okay. It doesn't mean that it's going to hold, but it means now my interest is peaked. So when I make a new high, especially when I have changes of character in here, like we've talked about, I can pull to this low, and I'm going to just snap it over here so we can see it. Look where it comes down and look what it hits right there. That's the 50% point from this high to that low. You see what I'm saying?
Mm-hmm.
So that is kind of looking at things, you know, semi-fractally, like it's very obvious on this time frame, but it's not like a major relevant level. But it doesn't mean we can't still see things. Now, you can take it a step further, but if you're going to do this, I kind of recommend just going down in time frames, and you can do this. Sorry, I moved my icons around. So you can see right here, it comes up, and then it goes down, then back up, and then down, right? So you could measure that to that and pull that over, and it's like a little over that. You know what I mean? So that's another way you can do it. But like I said, I kind of recommend doing it on the same time frame. And if you're going to use minor structure, that's fine, but make sure it's really visible on that time frame. If it's not, just go down in time frames and write down where you're at in each time frame. So like, all right, I would say like, all right, on the daily, my little notepad, I'd be like, we almost came up to the EQ, right? Of this high, this relevant high, and this, relevant low. So I'll just quickly kind of measure that from there to there. So we know we came almost to the EQ right there. Okay. So I'd write that down. And then I would kind of look at this minor structure on the daily and be like, well, we're in an uptrend, but I know this is the 4 hour, major structure. So we can go down to that, and that's apparent. You know what I mean? Now, if we look over here, the way in which we've been kind of marking our major structure relevant levels, and we've been, kind of chasing them across, we know because this one is in front of this one, we're in an uptrend on this time frame. So this is our weak high, and this is our strong low, right? Then I'll measure this and be like, all right, on the 4 hour, we should continue going up, and we just hit the EQ. But this is the problem right here. On my daily, I'm thinking we could have possibly hit the EQ on that, and we could start dumping. So you have to keep that in mind, and you have to, kind of give those things the weight in which they deserve. That the daily is obviously stronger than the 4 hour, and 4 stronger than the 1, and the 1 stronger than the 15, and so on and so forth. So we want to do this through all the time frames. Okay. So at this point, we know where we're at on the daily. We know where we're at on the 4 hour, or at least we have our idea. So let's go down to the 1 hour. And this right here is what's helped me like tremendously, is by doing things this way and marking those kind of relevant highs and lows, and then using that EQ, the 25 to 75 percent point, to figure out where am I stuck at in that time frame. So we know where we're at in the daily, we know where we're at in the 4 hour. Now we're looking at the 1 hour. So I have the 1 hour break of structure low there, which is the little cream colored line. And then I have the 1 hour major relevant swing structure there, which is the purple line. I'm sorry. So at this point, this is the range that I'm stuck in on the 1 hour. So I can do the same thing. I can come over here, I can grab my little fib tool, and I can grab from that top purple line down to the bottom. And when you're using the fib tool this way, you don't have to worry about pulling from the past, forward. If you're going to use the fib tool in the traditional way, then yeah, you would want to do that. Always pull from the past going forward. But that's not the way in which we're using this right now. So we can see this is the range that we're stuck in, and these are the, quarter and half marks, I guess is a better way to put it, quarter and half. So at that point, it comes and it breaches that quarter point and doesn't quite make it to here. So what does that tell you guys on this time frame. Don't worry about anything else, you know.
It's, well, I mean, I don't know. I was gonna say it could still go up, but
Well, it could, yeah, it can always
I
do. Yeah, it cannot, yeah, for sure. You're not wrong. It can always do, you know, either one, of course. But one
but
little
if it's
thing
about to
that
hit the top, then you'd be looking for a short.
exactly, you know, but there's like, you know, there's always other things to keep in mind. And this isn't exactly on topic, but what I would just kind of point out to look at, I need to program a button for this little thing. I would look at that one, oh, I went too low on that one. I'll fix it. This, that, oops, freaking magnet. All right, let me just move this one up a little bit there. That one. Okay. All right. So what do we see here with these arrows? We see
A lot of rejection.
But why is this happening? For what purpose do you think it's happening?
Strong resistance.
That but what are they, think about it this way. What are they trying to do when they're doing this?
What are they trying to do? Is that, I mean, I don't know if the
It's
term's
okay.
right, like
Yeah,
inducement, like when they're trying to do, does it like look like a false breakout basically?
there definitely is right here, like this big wick, which you can call a sweep, right? But you know, and a lot of people are like, oh, you know, well, it's going down, it keeps rejecting, right? I'm going to short, and that's what they do right here. If you look, like they short right here and they come down, okay, and it comes up and then bam, it blows through them. That's inducement, because what they did was they used a level back here, probably on a higher time frame, to fill their order. Now they set these points up so people short it, retail traders short it, and then where are they putting their stop losses? There,
right above.
there,
Yeah.
there,
So is that inducement?
and there. These aren't. Okay, so these aren't inducement. I mean, on lower time frames, yes, they are, but like speaking about this one alone, no. This one is. Now, this is what they, like what happened, because they induced people to short here, and they used a level back here on a higher, I would say, yeah, I would say a higher time frame. Let's look at it just to see what they do. Let me erase my arrows. Let me just go backwards here, make it a little faster. And one more. Okay, and then we'll go to the 4 hour. That's a really good point, I think. So yeah, so this is what they went for right there, which is a range on a smaller time frame. Okay, so it's somewhere in here. So let's cut the replay tool. Of course, Zoom won't let me move that. Can't see I'm just trying to, oh, okay, I can't move that. Cool. I'm gonna move that over here. Right, replay. I'm just gonna cut this off there, and then we'll go down to, I'd say 15-minute at least. Okay, so if I look at the 15-minute, you see this right there, and this I think is a big issue of like people have. It's like, oh, well, that level's tested, right? Because this comes up through it. If it doesn't respect it closely, it's not tested. This, you know, that's just not how it works. I mean, I know you know that, but I'm just saying it for other people. So let's go down a little further, and we can see there's more liquidity up in here, right? They've been trying to set that same thing up. It's probably really noticeable in the 1 minute. It's not gonna let me see it. Yeah, it's not gonna let me see it. It's too far back. All right, let me reset here. To that. Okay. That. Okay. So, anyways, like I was saying before, we know that these, candle bodies and wicks, the way they do this, where they come down, it's bought and then it goes up and then it's sold. That's a range on a smaller time frame, probably very visible on the 1 or the 3 minute. That's the point that they were looking to fill the rest of their shorts up here. Let me go back to the 4. Oops. I got to figure out this Zoom window. This thing's annoying. It's like all in my way. Yeah. Okay. There we go. Go to the 4 hour. Okay. I'm also looking at this little tiny screen I'm not used to. All right. So yeah. So something in here was the inducement. Like this was the trap. They set their trap right here. And then they moved up and everybody fell for the cheese and the mousetrap. You know what I mean? And they grabbed all their stops to fill their order to continue to move down. Right. So if we go down in time frames on the 15, it's pretty visible, So they're just setting all these people up and people are just shorting and shorting and shorting. And these aren't bad shorts, but if you're swinging for the fences from this point here and just waiting and your stop's right above that, you were too late. You know what I mean? You're short for more long-term, highest probability wise was in here. You know what I mean? You were waiting for that. And that's what I was kind of trying to explain last week to Moab, the way I see things that we talked about a little bit afterwards, is I always look for things above. If you have we all have seen like great levels, right? Like it's like, oh man, this level looks super sweet, it looks perfect. And then we set our orders there and then it moves up and it goes just above us and hits something a little above us and then goes in the direction in which we thought it was going to the whole time. And it's like, dang it, like what the heck, what did I do wrong? And it's, that's it really. It's the inducement. It's just kind of a trap of sorts. And now the place that I have found that these happen at almost every single time are the relevant break of structure levels, because you can see it, and this one before on the 1 hour and the 15, it was back here. So you can see if I were to put a level back here where it was prior, the 15, I think was there. And then I want to say the 1 hour was like there. So you can still see like they're all getting wicked, but they're not getting closed above, right? Those relevant break of structure levels are the points that we've heard in the past of like, these are origin levels, right? It's the same thing. They're just lines of liquidity. They're places of inducement, but more importantly, they're the levels that need to be broken or lost to continue or change trend. And, we need to figure out for each time frame what they should do. Like, should the high be gained because it's weak, or should the high be, should it hold because it's strong? And oftentimes it really, if you're like scalping, for instance, you can have a strong a weak high and still short it, but you need to adjust your expectations, right? Like you can't short a strong high and just expect it to go down to 7,000, but you can short it and then remove risk as fast as possible and take profits aggressively. It's the same thing as like trading counter trend, because everything is going to have a pullback that is at least somewhat important. So I think that, it helped me at least finding these relevant highs and lows on each time frame. And when you got them right, you'll see it. I mean, it's plain as day. Like none of them are being closed above. And when you find those, that's where you can really plan your trade. And you can start at the daily, just like we did before. So let me remove this fib right here to make it a little confusing. So we started a daily and we found, those 3 points in the middle of that. So that kind of gives us a better idea of what's happening. We did the same thing on the 4 hour. We measured from here to the low on the 4 hour. So we know this is the EQ, which is like exactly where it bounced off of. And then we keep going down, right? Like we just keep doing that same thing. That's the 1 hour low to the 1 hour high. Here's the EQ. So it's like, well, on the 1 hour, this thing could very well pull back to here. But on the 4 hour, this did kind of make a new high. And, this is a strong low. We hit the EQ. So we should kind of gain this. But do we have to gain it right now? Like right when we come up to it? No, of course not. Like it may basically come up and do this and come down, but then hold what got it there and then blow through it, So these are just all things, one time frame is never going to give you all the information you need. But I feel very strongly about using the fib tool in that way, that finding that 25, 50, and 75% point is so beneficial. It really does help a lot. At least it has for me. And last thing that I really wanted to point out before I kind of see if any of you guys like have a question about what I see, is it doesn't always have to be a very visible low and high, or high and low to measure from. A lot of times it's also an inside bar or a order block is what a lot of the quote unquote smart money concept people kind of call it. So let's do it on this one. Just picking a random one. So let's do this one. This was the, candle that went up and then it was sold off and then created, new lows from there. So I'm going to just pull it over here. So this is the high, this is the low of that. It comes up, it wicks a little past that quarter, right? Let's do it in a couple places. So let me pull this one. And now you can measure from the wick of that last accumulation candle or the body, but I always measure to the wick on the top or bottom side. So that swing low or swing high, I always go to the wick, but the inverse part of it, you can go to the body. But again, that's kind of fractal information. I don't want to get kind of too lost in the weeds on that. So you can see when this comes down and look where it comes up to, right at that quarter mark, right there. And if we were to drill down in time frames, you'd see that that's merely just a range on a lower time frame. Let's find one on the bottom. All right, let's see. we'll measure this one first. So we're going to go wick to wick here. It's that. So it comes down to the 0 point, but the first spot, you know, is that high point, and then the bottom is that point. Okay. And now let's delete that. And let's pull over a little bit more. Let's do this inside bar just to see what it is. I'm going to pull all the way over here. Okay. Let me zoom in. Stretch it out a little bit. All right. So it came up, and then as it comes down, it stops at that 25% mark, never closes above this first quarter. And then once it does, it kind of comes down, back test that, and hits that, and it's wicking, but never closing above. So it's really fighting to get above this range on a lower time frame right here. And you can just see how it responds to these levels, the way in which it wicks. And like I said, I know a lot of thoughts in people's heads are like, well, yeah, but how do I place a trade off of that? And that kind of is where the fractal multi-time frame aspect comes into play, which we're going to start talking about kind of next, you know, and one in which that I think will take I think, you know, couple of Wednesdays to really get through, because I think it's really one of the more important things, along with the whole premium and discount aspect. But just the point I wanted to make with that is it doesn't always have to be these major highs and lows where we pull that from. Those are the best places to look, but we also have to understand that every candle is essentially like a lot of information. So if we look at a daily candle, there's a lot of 1 minute candles in that daily candle. You know, let me pull this back here. Okay, let me go to 15 minutes. I'm not going to let me go back too far. Okay, so you see that was one candle that I had marked, and you can see kind of how there's you know, like almost a range in here right there. So, well, let me go back any further. Yeah, cool, perfect. Yeah, so that was the high of that candle, and this was the low, more than likely. And you can see how it's responding to those levels in here. So they're very powerful, and it's not like, oh, I just click the sun here and on one time frame, and that's where I set my trade and I'm good to go. And you know, I can be like one of these guys on Instagram with, you know, 2 or 3 $10,000 stacks of $100 bills on my trading desk while I film an Instagram reel or a TikTok video. But it is one piece I think is really important and a step in the right direction. So it's one of the more important variables in my mind, the way I see things.